Good morning, YouTube. My name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Good morning once again. Thank you guys so much for attending, and good morning, good afternoon, good evening, depending on where you're tuning in from. Again, my name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Thank you guys for tuning in once again. It's been an interesting past couple of days in the markets. We had a pretty decent move off the highs in the Nasdaq. We had a move off the highs, of course, in the S&P 500. And we've been tracking the possibility that we are entering into a larger wave 2 correction. And you know, this market continues to buy up pretty much any dip. We had additional news out of Moderna regarding the ongoing trials as it pertains to their coronavirus vaccine. And of course, the market was excited regarding that news. And that was something that was a bit of an intraday catalyst. We'll see how futures continue. As you can see, just off to my right, to your left here, futures are ticking back to the upside here. The Nasdaq futures are underperforming the S&P, and that's actually something that we saw in terms of the recovery efforts or the retracement. In fact, let's just go ahead and bring in the team, and we'll jump to the charts here so you guys can see it better. Good morning, Terry. Good morning, Alex. How are you guys doing?
Hey, Bennett. Good morning.
What's happening, gentlemen?
Hello, Bennett. Good morning, everybody.
You guys staying healthy and steering clear of this COVID?
As clear as I can be. I know my neighbor across the street, him and his family got it a few weeks ago, and they hunkered down and rode through it, and they survived, but they said it was miserable.
Yeah, that's unfortunate. There's it seems to be kind of hit or miss. Some people are having pretty severe symptoms, and others are having more mild symptoms.
I think they went night clubbing in Houston.
Oh, wow,
and,
okay.
They were not social distancing correctly. They thought they had it in February.
Really?
They had flu in February. They were really bad sick in February, and they thought they already had the coronavirus, and so they just said, we're immune to it now. We'll just go out and honky tonkin', right?
Yeah, we're good to go.
And nope, apparently what they had was just the standard flu. So be careful. If you think you've got it, unless you actually get tested, you don't know for sure that you had it already. So
you never really know. That's very true. I've been hearing people having COVID parties. That's just I tell you.
Yeah, I still struggle to figure out what the schools are going to do. Everybody around the country, schools are scheduled to start like August 10th or 11th here in Texas. That's really early, I thought, but they're still scrambling to figure out exactly what they're going to do. Summer band starts next week. My daughter's a senior now, and she's in the band, and they've got to start organizing, activities. But if and they don't know whether football is going to happen this fall. If football gets pushed to the spring, they may rotate other sports like non-contact sports like tennis up front. Who knows? It's just like really crazy trying to figure out what the hell's going on this year.
Yeah, a lot has changed, and I think it is going to be interesting to see as we get back into the fall school year whether or not they go in person or online or start online and with plans to go in person, or who knows. So it's an interesting year. We're now halfway through it. How are things in your neck of the woods, Alex? Everything going well?
Well, not exactly. The cases are jumping relative to our number of population here, and the situation is worse than in April. But they're not going to probably do the lockdowns. Everything is left on the personal responsibility. So the masks are obligatory now, but the numbers are bad. So unfortunately, it's jumping here, and every day we have also people dying like everywhere. But as I said, relative to numbers of our population, for us, this is relatively big. So so it's still in full blow here.
Yep, and
so
I think it's gonna. hopefully, the vaccine progresses, but, as you mentioned there in terms of deaths, those are obviously the key metrics that we should be, paying the most attention to: daily hospitalizations, daily deaths. In fact, here in Texas, go ahead.
Sure, but I mean, even if when you have the vaccine, you need to do and apply that on so much number of people in the world, so that will go also slow. So I think for another year, or for at least 6 months, if we get some vaccine until the next of the year, we will live with this. So it's inevitable. It's not going to pass. Now it's clear.
Yep, I agree. I think it's going to be a little more drawn out than a lot of people are thinking. And in fact, California now just got back to closing a lot of bars, restaurants, churches, things of that sort. So we'll continue to track it. And of course, we've got the election coming up. That's going to be a very interesting area and component going into the markets here. So very excited to see what the rest of the year has to bring. So guys, let's jump into it. Let's take a quick peek at what we're tracking here in the S&P. In fact, I want to start it out with the Nasdaq 100 because going back a couple of weeks, this was really the chart that told us, in addition to Google and Apple and some of the other key holdings within not only the Nasdaq 100, but the S&P sector, SPDR ETF XLK, which is the technology sector. We identified this three-wave swing into new highs here from essentially, call it June 15th through June 22nd. And that was indicative of the fact that we were likely going to see a post-fourth wave break to new highs in the form of a wave 5 position. We have this wave 4 here that squares up to this wave 2. If you take a look at the Nasdaq in terms of percent change off of the March low, we've seen a 63.45%, call it 63.5% move to the upside here in the Nasdaq 100. And for some reason, MotiveWave is not wanting to let me delete this. So let's try the good old edit undo. That's not going to do it either. So we'll just we'll let that one slide. Maybe it's my keyboard today. So from there, let's get you guys off the daily. Let's get you down to a 195 chart. We pointed out that the count in terms of a motive impulsive trend, in terms of what you would typically associate with the characteristics of a motive impulsive breakout. We noted the fact that we had a lot of overlap here in the Nasdaq, and really squaring up any corrections with any degree of certainty was a little bit difficult and very challenging to do in real time. And even looking back on this structure, it does leave a couple of possibilities in play. But more importantly, we noted the fact that we did have kind of our typical third wave confirmation indicators, such as a peak in volume. We saw a peak in relative strength within that particular third of a third of a third, which is typically your most aggressive kind of angle of ascent. In addition to that, we also had some solid acceleration gaps that were continuing the progression of this motive impulsive trend. And we've now seen a move to just shy of what you would expect to be upside wave 5 projections. In addition, we can take a simple completion of our wave 2 and wave 4. If we just draw a trend line through the completion of 2 and 4, you project a parallel trend line over the top of 3. That gives you your impulsive uptrending channel, which we often utilize to help determine or look for fifth wave resistance. And we've definitely seen a move off that level. And if I get you guys zoomed in here just a little bit on this chart, the retracement to the upside yesterday in the Nasdaq was nowhere near as significant as the retracement that we saw in the S&P. And in fact, looking at the S&P, we'll take you back to the daily chart just to give you a better look at this entire structure. Off of the March 23rd low, we were identifying that as a likely fifth wave completion. From there, we did print about an 8% correction, 8.2% or so, move to the downside. We essentially unfolded in three waves, regardless of if it's a three-wave zigzag or a three-wave flat, or in this case, likely some sort of a complex. That move gave us equality of our corrective legs, and that's kind of where we ran into resistance at what would be equality of Y and W as well as B versus A, so a full retracement of that decline. That kind of puts us in flat territory. And from here, if I take you off the 195, and we don't usually take you this this low in terms of degree, just because things can change very rapidly. But this is what I noted in terms of the move into the lows yesterday. We essentially had a nice 5-wave structure off the top, a 5-wave rally back, 3 waves back to a 50% retracement. And from there, we surpassed equality of C and A. We surpassed a 618 retracement, which would be 3193, and the futures market continues to press higher this morning. We've got the 786 at 3211. So this is really the zone that needs to hold if this trend is going to continue to the downside. Invalidation of this wave 2 or C of wave 2 potential comes in if we break over that 32.35 level, which based on the futures action this morning is possible. But given the weakness in the Nasdaq 100, I wouldn't be surprised to see that level fail. Now, if the market does continue to press higher, there's one possible near-term opportunity if you guys are looking for something in terms of trades, and that is oftentimes we associate a break of our 78.6% retracement level to be met with a move to an external 1272 retracement. And provided we continue to see this market retracement and effort continue and earnings go in the market's favor, as you can see the list, I'm bringing it up here. We had banks starting us out. We've got Netflix on Thursday after the market close. We've got Microsoft next week on the 22nd. So we're getting back into earnings season. In terms of data, we do have this morning industrial production. We have retail sales on Thursday. So I'll be curious to see how all of this kind of factors in. Perhaps we'll see some fundamental catalysts to support the continuation to the upside, some fundamental confirmation, or perhaps it'll support this C wave decline. But should we break through that invalidation level, might be looking to get a move on towards that external 1272 retracement. The only other valid wave count that we can see in terms of an impulsive continuation trend is the count that you're looking at right here in front of you. And we had a member reach out and suggest that perhaps there was an invalidation in that we have an orthodox low inside of this 4th wave that does overlap. But the rule is actually the completion. So we do not have any overlap here between our completion of waves 4 as compared to wave 2 within this particular trend. They do score up to one another quite well in terms of the percent of the correction that was seen within those corrections, or those wave 2 compared to wave 4. And that would put us in some sort of a 5 of 3 situation. The Nasdaq, on the other hand, it's very difficult to get any count out of this that would be healthy and really continue to the upside. You know, taking a look at this chart in terms of the angle of ascent off the lows, this is extremely aggressive and really not sustainable or conducive to long-term growth. This is getting into the kind of really overextended territory where we're actually seeing momentum divergence as we're setting new highs, which is often a reversal sign when used with some of our market internals. So I'd be a little bit cautious to see, you know, how this dip is handled in the market. But given the fact that we are heading into the election season, we are looking for a bit of a correction lower. And in terms of the higher degree count, before we wrap this discussion up, we've had a target here at Trading Analysis of 4,000 in the S&P for some time, and that is just a simple measured move, basically equality of wave 5 as compared to one, given the fact that we have that beautifully extended 3rd wave right into our 1618 multiple of our wave 1. It's kind of a textbook trend. We also have a textbook squaring of wave 4 as compared to 2, meets the guideline that suggests corrections of the same degree tend towards equality. Now, looking at this in terms of our higher degree trend channel, all we're looking for is a simple 3-wave correction back to our middle trend prior to the resumption of that 3rd wave. So we like the markets. We think the wave 4 low is in fact likely in. A move lower from here is likely just some sort of a wave 2 correction unfolding. Keeping your eyes on price action and substructure there is obviously going to be important. In terms of some individual charts, I'm going to go ahead and bring your direction just as an update. Beyond Meat is one we've been tracking into a Wave 5 completion. And we actually had a question a couple of weeks back, and I had replied to the gentleman via email, but I wanted to follow it up here. And the question was this, what comes first, the wave count or the news, right? What comes first, the chicken or the egg, the wave count or the catalyst? This is an instance in Beyond Meat specifically where we had a 5-wave move coming to completion. We had counted a beautiful up in 1, down in 2, a nice extended 3rd wave, little 3-wave correction down here in Wave 4. Wave 4 demonstrated just shy of equality as compared to Wave 2, but it had some pretty solid fib work going on in terms of its corrective legs. And from there, we started to press higher in this Wave 5 position. Now we came a little bit short of your typical upside projections, but the reason being is this. Not only did we have that Wave 5 coming to completion, which was, we were seeing some momentum divergence into that Wave 5 top, we had news come out where McDonald's no longer decided to pursue their relationship with Beyond Meat. And that was met with a pretty swift move from 164 down to the likes of 125. From there, we actually entered some sort of a B-wave retracement. And what's really fun about this B-wave is, see this little acceleration gap? This acceleration gap into 150 was in regards to Beyond Meat and a deal with a Chinese distribution company. And when that B-wave kind of unfolded, B-waves are very typical for trapping traders. And here's a great case where you had a pullback from 164 down to 125. We gap up to the 150 on news, which was simply, when looking at this chart in the or through the lens of Elliott wave, was a 61.8% retracement and was likely just some sort of a B wave after an impulsive 5-wave trend lower. From there, we've already printed a move from 144 down to the 130 handle. I'm looking for a simple measured move into equality of CNA. That would be basically a retest of around the 110 level. Wouldn't even be surprised if the markets really start to roll over to see this C wave take us down to the 100 level, which would kind of be a psychological price point. So that's Beyond Meat, ticker symbol BYND. Google, this is a chart that we were also tracking along with the Nasdaq, and this was another chart that kind of gave us the clarity in terms of a possible new high there in the Nasdaq. And what we have here is off of this wave 1 origin in the March low, we have this beautiful up in 1, down into smaller degree 1, 2, smaller degree 1, 2. Here's our acceleration gap in 1/3 of a third. Wave 3 comes to completion right at a 200% as compared to Wave 1. Our 3-wave correction down here in Wave 4 gave us a 1272 extension as compared to B, equality as compared to 2. And from there, again, taking into consideration that extended third and equality of Waves 5 compared to 1, that told us to anticipate 1573 here in Google. We also had our Elliott wave trend channel, which was kind of lined up with that equality of 5 and 1. The true high, intraday high here, was 1576.36 as compared to 1573. So this chart here suggests a 5-wave completion. The Nasdaq 100 is suggesting a 5-wave completion. I'm seeing some opportunities near term for downside opportunities back towards previous support and 4th wave support in Google. The last chart I have for you guys is that of Facebook. And in Facebook, we came a little bit short of Wave 5, but notice we have a beautiful Wave 4 squaring up to Wave 2. Here's a nice example of our Wave 4, or excuse me, our Wave 5 completion coming in right at the upper end of that Elliott trend channel. And again, a beautiful 3-wave correction lower. This also lines up with the idea that we are seeing that 5th wave completion out of the Nasdaq 100. So let's go ahead and hand it over to Terry. He's going to bring us up to speed on sector rotation, and we'll see how this kind of factors into what we're seeing in terms of the chart. So Terry, whenever you're ready, sir.
Yeah, go ahead.
All right.
Good analysis there, Bennett. So
thank you.
regardless of whether the market is going to roll over or whatever, remember the sector rotation charts that I'm showing you are going to be performance of individual ETF sectors or stocks versus the S&P. So whether the S&P is going up or down, that's kind of irrelevant. It's which stocks and which sectors are outperforming there. Let me show you. Let me start over here with this chart here. This is Monday's price performance. So we had the big down. We had this big black down day. This dark cloud or whatever that we call this bar, it's almost engulfing. I don't know if it really did or not, this previous uptrend candle, but this down day was done in our leading sectors: technology, communications, and discretionary. Real estate's not, it was down pretty big, but it's not one of the leaders. But three of these four that were hugely down on Monday, almost 2% here, or over 2%, I guess, for technology, is coming out of the leading sectors. And, there was a little bit of healthcare and, financial and industrial uptrend on Monday. This chart here is now Monday plus Tuesday, right? Monday plus Tuesday together. So we opened here and we finished here, and now this morning looks like we've got futures pushing us up to the top of this bar, this little box I've got drawn here. But if you notice, Monday plus Tuesday did not come out of our leading sectors. Technology and communications actually are still slightly negative. They recovered about 1% yesterday. What did cause this bigger push is most of our defensive sectors: energy, industrials, healthcare, and financials. So let's take a look here. This is the weekly rotation. We've got it sorted by relative strength ratio, and it's compared against the S&P. So anything to the right of the vertical axis means the relative strength of these sectors is outperforming the overall S&P index. Anything to the left, all of these sectors are underperforming the S&P. So what we have here is we have technology still about 106%. So there's 6% greater relative strength performance. So even if the S&P goes down, we expect the technology sector will probably go down with it, but we still expect the technology sector to outperform. And I would probably translate that, Bennett, into the Nasdaq also continuing to outperform. Even if it does go into a correction, I would expect it to be a lesser magnitude than what we see in the overall S&P, simply because of this nature of how this works. Consumer discretionary, communications, and then we've got materials sector. Materials sector pushed over into the lead a couple of weeks ago. I've been talking about that. So we have that, and as materials was pushing in, we were seeing healthcare exit. So healthcare started to exit. The only thing that's interesting is this very last week, which includes the last 2 days or the first 2 days of this week, Monday and Tuesday. There's a little bit of a hook forming here in healthcare just early, right before it crossed over into the lagging quadrant, but it's precipitously close to this border. Unless healthcare just takes off this week, the rest of the week, and shoots straight up based on that Moderna news that we heard yesterday, or other vaccinations, it's possible that you're still going to see a little bit of continued lagging performance. We're also seeing a bottoming in staples. That's this hooking formation says that their continued downtrend is starting to turn. However, they're still pointing to the left, which means they're still continuing to lose relative strength ratio. You really need it to turn, like XLI. Industrials are starting to gain relative strength, yet it's still way off. We really need to see stuff come across this border from improving into leading to see true sector rotation. But you can visualize it here with the animation. You can see the rotation. You can see the different lengths of the tails tells you the different velocities of which these sectors rotate. So for now, the tails are not very long here in our leadership, and technology is kind of meandering around. It's kind of hooked back and forth here, but it's just like I said, typically holding its own. So let's jump in and take a look here in technology. And what you notice here in technology, here's the S&P. These are all sorted by relative strength ratio. That 75% of the stocks that I have here in the top 20 of the XLK. There's a lot more stocks in the XLK, but I only picked the top 20. Otherwise, the chart gets too cluttered. But 75% of what I've got shown here by market cap is still, to the right of this vertical axis. There's a couple like IBM and Fiserv and automatic data processing, Fidelity National Information, and Intel. Curiously, of all the semiconductors, Intel seems to be underperforming, and I'm not sure what that is. Maybe it has something to do with their product lineup being different. Compare Intel versus NVIDIA, which NVIDIA is still significantly outperforming, and I really haven't seen NVIDIA. It's just making little zigzags here, but that's just in terms of momentum. It's all vertical movement, and there's really no horizontal movement, which indicates that NVIDIA is not giving up its relative strength position very well. PayPal is losing momentum. That's to be understood. If the market's about to roll over, you're going to start to see a lot of things lose momentum. If we jump over here into the semiconductor subgroup of the XLK, again, Intel underperforming. Micron is down here in the lagging, but the majority of all the semiconductor stocks are still in good performance here. This is consumer discretionary. And similarly in consumer discretionary, about 50% of the stocks that are here are outperforming. We continue to be led by eBay, Amazon, Lowe's, Dollar General, and Home Depot, although we're seeing some declining momentum in this, but holding relative strength, right? Vertical movement, I'm not so worried about. It's horizontal movement that I get nervous about when things are rotating out. So big Tesla. I'm just looking here at Ford and GM because it reminded me of a comment that was made Monday when the Tesla stock appreciation gave Elon Musk a boost to number 7 on Forbes 500. He gained $7 billion. He's now worth more than Ford, GM, and a whole bunch of other companies combined together. So he's got a long way to catch up with Jeff Bezos, though, I think. He's about halfway there. So we need that $4,000 price appreciation in Tesla to get Elon Musk up to Bezos. But by the time Tesla gets to 4,000, what the hell do you think Amazon's going to do, right? So that's a move. In communication, so Bennett covered Google and Facebook here. Facebook is one of our stronger stocks in the communication. Netflix actually is moving to the left, so it's starting to lose a little bit of relative strength. ATVI, T-Mobile, they're drifting down a bit, but they've got a big buffer. They've really got a big buffer. And the other thing I see is here a little bit of a hook going on in Netflix. So don't dump any of these stocks. Anything that's over here on the right, don't dump any of this. If you've got stuff over here, if you own Verizon, you shouldn't be. Disney is an iffy. Disney is much more longer term than it is a short-term trade, I think. But it is gaining relative strength, so it is nicely moving from left to right. And I think once we start to see how park openings and how that performance comes, earnings are going to earn. This is earnings week, right? Beginning of earnings week, and I think Bennett, you ought to talk about some of the financial reports that are coming out this week, and a little bit of a few others. But I know eyes are on the earnings. Second quarter earnings are expected to be bad. So it'll be interesting to see what the market makers do with price performance on earnings. Was it as bad as excuse me? Was it as bad as we thought it was going to be? And then forward looking, right? The market's always forward looking to what's going to be happening in the third and fourth quarters, and pricing things out to there. Materials is the last of the leading sectors, and you've got the continued This is a really nice continuation of gaining relative strength in Freeport-McMoRan. And this company, I believe, is heavy into copper. Alex, you want to cover copper? I think some of our clients are asking about that. They're into molybdenum, copper, and a little bit of gold, I think, and some oil. I think they diversified themselves with a bunch of oil. And maybe that's why they've been gaining strength, is because they got out of the oil before oil dropped too badly. But I like Dow, Lyondell, Basel, Celanese. They're all improving, but they're all moving nicely to the right. They could become our future leaders. DuPont is certainly clearly in this leadership position. All right, so I don't really want to run you through all of the other laggards. I will touch on healthcare just a little bit. So as I showed you here, this dramatic push down in healthcare, well, here's the reason why, is because of all of these stocks in this healthcare sector, they're just running to the hills, right? They're pushing lower and they're exiting. Relative strength is just exiting, right? Moving from right to left, with the exception of a couple here. Thermo Fisher Scientific looks like it's hooked. That one might be a good short-term opportunity, but it is. Here's its price performance. You could think of this 1, 2, 3, 4, maybe up in 5, but maybe 1, 2, 3, 4. Maybe it's got another little push going on here. And I think that's what you see sometimes when you're out here in this weakening quadrant. You see another rotation. Is maybe that's a fifth wave about to push higher again. And again, these are all relative to the S&P. AbbVie, iSurge, but not too many up here in the leading quadrant. So these other defensive sectors, right? These other defensive sectors have all hooked, like Staples. But there's just not too much that's really improving. So going back to this, right? So these are just momentum bounces. I'm pretty sure industrials and energy, they're just nowhere. They're nowhere yet to be positioned to take over leadership roles. So I'm not going to cover all that. I just for time's sake, I want to give Alex some more headway. All right, so.
Very good. Much appreciated, Terry. And we'll go ahead and transition your presenter, your direction, Alex, whenever you are ready. Yeah, futures starting to roll over just a little bit going into the open here. All right, sir, the screen is yours.
Okay, so let's cover usual stuff that we do every week. So we're gonna look some of the cryptos, Forex, and some of the macro stuff. So let's start with the macro stuff. As you know, we have been tracking this dollar index, and we have been kind of looking for lower levels. But I still think that a move up in some type of this orange wave 2 is possible. So on the higher time frame, we are still searching for this 1-2-1-2, and I think this is most probably a flat corrective pullback. We have a 3 waves up in A. I'm expecting a 3-wave move down in B. So that's around between 94.97 and 95.30, which is pretty close. So if we penetrate that zone and start to push stronger to the downside, then we have to anchor this wave 2 here, and we should be already in the strong wave 3 to the downside. So I still think, looking the other macro stuff, that we are going to get one pretty nasty move on the upside in dollar, which will actually be a kind of a sweet one for the dollar bulls. But for me, that was still going to be correction, and I'm going to expect still a further move lower as long as we trade below this resistance and at 151. As oil is concerned, I'm expecting oil to move lower. I'm still looking for the completion of this 5-wave move, and I think we are pretty much there. Potentially one more really small push on the upside. And then I will expect either ABC or something more complex, more prolonged to the downside. We will see when the first parts of the correction unfold. But I think we are very close to some type of a corrective move down, because the 5-wave sequence is probably already done, which goes along with our S&P and some other stuff. So as we look also what is going on euro dollar, so just let me show you some of the other currencies. So euro dollar is basically flip off the dollar index. So over there, I'm still gonna look this resistance. Usually the previous wave 4 or the B wave can be the very strong resistance for the further advance. So I'm not gonna follow this move and just starts to look to more upside. I'm still even structure-wise look this as a 3 waves down, 3 waves up, and expect 5-wave move down in this 110, 111 region very soon. Tomorrow we have a ECB. So European Central Bank, we will see what are the figures and what the Lagarde is going to say. So as long as we trade close to this 127, I'm still going to look for a push.
That's not take that invalidation flag off of there, Alex. That's not, that's distracting.
Yeah, must be left from the
we don't have a true validation level here.
Yeah, no. Yeah, we have some down there, but for the upside, no.
Right.
Okay, so that's on the currency spectrum. We are still short dollar yen, and we are looking for a more weakness there. So we're gonna keep and follow this one further. We are still short also Bitcoin. We are tracking the 2 wave counts. Bitcoin is relatively correlated to the S&P, at least if you look on intraday charts. But here, this consolidation can be also taken on several wave counts. So the one is actually projecting a bit higher levels, considering this to be a triangle, and it certainly looks like one if you look from this perspective. But also we have a wave count which also is particularly valid from the Elliott wave standpoint. So this is either ABC and then we have an X and we wait another ABC, or this is 1 2 1 2. But with this 1 2 1 2 wave count, I don't like that we didn't see a really strong acceleration to the downside, which is usually a characteristics of the third wave. So I will probably look this as a more complex corrective pullback to the downside, around to this 7,600 to 8,000 levels. We already pulled our stops down below our entry, so we are kind of a safe and has a free ride. So we are still kind of awaiting this break to the downside with the S&P, and I think we're gonna get it, but it's it starts to be too wide in time for some reaction. So I think we are soon going to see something very abrupt. And unfortunately, we are still short, but I must say that there is a conditions also on this one for the break on the upside. So copper, we have seen some demands from copper. I'm going to show you gold also. So the copper chart works still. Our view has been that the copper is on the long side as long as we hold this low. And this is a 5-wave move on the upside, and then you have a 3-wave move down in W, 3-wave move up in X, and then a 3-wave move down in Y. We didn't breach these levels here. It was kind of a tricky because we had our ratios pointing out a little bit higher, and when we started to move down, I was really thinking, because it was in the middle of the March, that we're gonna break lower, but we didn't. We kept it above it, and now we are developing an impulsive structure on the upside. This is a daily chart. So as you can see, the RSI is pretty extended, already trading above 80, and you can kind of squeeze 5 waves up. So I think we are near either a little bit higher or from here to see some corrective pattern in ABC or something more complex to the downside in copper. So I'm gonna just show you more gold and silver. So gold, my view is still the same. We are dancing around this 127 level, which is still my B wave. We have squeezed just an inch above it, but I was still thinking we're gonna get some type of a wave 2 here, and then continuation on the upside. But what I've discovered during the weekend is this gold silver ratio, and I published it on my Twitter account. So this is the gold silver ratio, and as you can see, we are seeing an outperformance of silver over gold, and this outperformance is in 5 ways. Okay, so we have a little bit, we already printed a new low, which is this is 1 or 2 days chart old. I think we are somewhere around there now. So after a pullback, if we are going to see a complex or a simple one, I still yet don't know. But what I can maybe tell with a bigger probability is that silver is going to continue to outperform gold. So after some pullback, also I'm gonna watch for silver. Possibly on the long side, if we see a risk on still develops. So there is a 5-wave sequence in silver developing here, which I think it's close to its end, as you can see. So we can easily count 5 waves here. So there is a wave 1, 2, 5 waves up in 3, down in 4, and up in 5. So we are very close to some type of a pullback, and I think that maybe gold will hold a little bit better. Maybe we're going to have a little bit more a more deeper correction in silver, while this gold silver ratio corrects in this ABC, and then I expect silver to outperform gold on possibly on the bullish resolution. So I hope it was quick. Anything else, guys?
Yeah, very good. I think we covered it all. Anything else you can think of, Terry? Nice job, Alex.
Oh, we're not really interested in oil right now. Oil's kind of been stagnant, hanging around this $40 a barrel region, and I think dollar CAD and dollar NOK are also kind of not as interesting plays, where they're kind of range bound and uncertain. So we're kind of holding off from those.
Yeah, actually on dollar NOK, I'm looking for a full developed 5-wave pattern, which will actually signal us that the move up in dollar is over. But we still need to confirm this. So this is a daily chart. I like to look a little bit higher time frame. So I'm still expecting some type of a move higher in NOK over the dollar. So Norwegian currency is relatively good now, and they didn't print much of it. So I think that lots of except for the oil, Norwegian currency will start to have a different or added role in the future, because I think I need to check for exact data, but I think that the Norwegian central bank didn't print even one addition to current money supply, which will gives a substantial value over other fiat currencies potentially in the future if we see more printing. So I will be happy to be long NOK after some type of this B or wave 2 pullback. So for now, we are seeing a potential 5-wave move to the downside, and the completion of the dollar run on the upside in this pair.
Very good, much appreciated, Alex. And yeah, just a reminder, I see Todd in the chat there. It is tax filing deadline. We had our extension, of course, from the typical April 15th, and today's July 15th. So if you've let it kind of slip your mind, and now's the time to to get out the software and go to town. So guys, hey, thank you so much for tuning in. Alex, Terry, fantastic work as always. If you guys enjoyed the video, enjoyed the live stream, please give it a thumbs up, subscribe, turn on notifications if you're interested in staying up to date. In addition, you can also subscribe to our Trading Analysis YouTube channel. We're going to be launching some more regular public content on there, so I hope to see you guys over there. And once again, thank you guys for tuning in. You can check us out at TradingAnalysis.com. Stock options, Forex, and of course, cryptocurrency. Alex,
yeah, join our membership. Join our membership. So you get daily updates from Bennett on the stock market. Alex and I also hold a detailed webinar on Forex and blockchain, and we run a separate recommendation service there than the Premier service. So you get more. If you like what you're seeing here on the YouTube live stream, you'll like the live membership even better. So.
Yep, absolutely. In
All
fact,
right, see you guys.
in 25 minutes, we've got our Premier member webinar this morning. So guys, thanks again. Be safe, and we'll catch you guys all next week. Have a good one. Take care.
See you guys. Stay safe.
See you, Terry.